Hello and welcome to TBFSI.com by the Economic Times. My name is Amol Dete and you're watching FinTech Diary. In this episode of FinTech Diary, I have with me Adhil Shetty from BankBazaar. Adhil, glad to have you.
Thanks, Amol. Good to be here.
So I have been seeing you quite aggressive and you have been following the BFSI space, the whole banking, finance, insurance quite diligently since ages actually.
Right.
You know a lot of things. You have followed a lot of developments of the BFSI.
Right.
I just want you to tell me and my viewers right now, where is the BFSI stand today in terms of banking, finance, insurance? What are the major trends, if we begin, that you are seeing specifically in banks, and then we'll go also in insurance, and then we'll talk about the other sectors as well. So what are the major trends that you see in the banks today?
Right. So today, right, I think everyone has rapidly adopted to using digital technology. So BankBazaar has been there since 2008.
Yes.
At that point in time, digital was maybe fourth or fifth on the priority, but today it's number one, right? Given that it's number one, it's being driven by consumers because consumers don't want to go wait in a line. Consumers don't want to sign paperwork. They want to sit in their house. They want to do a video KYC approval, and they want their credit card. They want their loan. They want their FD. So the consumer expectations are driving it.
Yes.
I'd say the three trends I'll call out. So firstly, right, India has done incredible work in terms of building up our digital economy. Like GFF, you see all the posters in Bombay with the Prime Minister. It says world's largest FinTech festival. We've got to that level. But I think now the time is for the next generation of digital reform.
Right.
So we did a big GST reform to turbocharge the economy.
Yes.
But digital economy today, according to RBI, is 20% of GDP. We need digital economy reform. It's around privacy, around AI, around digital public infrastructure 2.0. So that's one topic. Secondly, right, everyone is talking about governance, right?
Yes.
Because as the fintech industry, as the banking industry scales, at BankBazaar, we've been thinking very carefully, right? And I engage via multiple industry bodies saying, how do we ensure fintech industry can scale in a compliant fashion? We can talk about that focus. And lastly, the word on everyone's mind is AI. How is AI going to increase revenue?
Yes.
How is it going to cut cost?
I will come to AI shortly and maybe try to take your perspective there and also on the digital reforms. But let me get a dashboard today because there are different reports and different analogies about the current credit growth, the banking cycle. While fintechs are helping banks to generate more leads, right? The disbursement from the banks is still very low. What kind of difference do you see today? Because the digital has picked up. There are buy now, pay later kind of loan models also available. So as a marketplace, how do you see the whole dashboard of the banking and the insurance? Are people buying more products online? Are banks, BFSI companies selling more products online? How's that thing happening?
Yeah. So definitely everything is moving online, but let's talk about data because that's what you brought up. So I'll talk about credit card, right? Because BankBazaar has a large co-branded credit card base with several leading banks. We look at data very closely on a month-on-month basis. So last 5 years, right, credit card spend has been growing at an average 30% growth rate in spend.
Yes.
This year, right, 30% has come down to 20%, right? Now, is that a significant reduction, 30% to 20%? Absolutely. But if you look at demand, right, consumers are still demanding. So we see at BankBazaar that's everyone today, even if they have UPI, wants a credit card because they want that reward. They want 30-day, 45-day credit-free period. They want that no-cost EMI. Even though the demand is still there, right, I think the supply in terms of who's getting approved, that's become stricter.
Right.
So what's happened in the last 2 years, right, previously, if 100 people were applying and 50 people were getting approved. Today, 100 people are applying and maybe 35 people are getting approved.
Right.
And that has been the situation that slowdown that we've seen from credit card spend growth of 30% to 20% has happened. But my view and what all my banking partners, all the large banking partners are saying is that this is a short-term phenomenon. Because there was a risk weight average increase by the RBI, cost of funds went up. Then there were certain issues where certain low credit score segment, and this is why at BankBazaar we tell people keep your credit score high. Certain low credit score segments had gone bad. So everyone believes it's temporary. So if we were having the same conversation, Amol, 1 year from now, I believe that the growth rate would have bounced back to what it was in the last 5 years. And what we're seeing currently, right, is a temporary slowdown, because I can assure you demand hasn't changed.
Okay.
India is aspirational.
Absolutely.
People want a credit card, people want a home loan, people want a personal loan. It's just that it's become stricter,
Right.
which is why less people have gotten it in the last 18 months.
Right. So I copy you.
Okay.
But when we say it's a temporary slowdown,
Yeah.
again, just want to make it
Sure.
sure and
Yeah.
reconfirm.
Mm.
Is it because of the risk weight has been increased?
Mm.
It is because of the banks have gone very strong against maintaining their risk. So that's why they are going slow on maybe disbursing the credit, issuing the more credit cards, or you see the demand is absolutely there, and because of this technical issues, maybe they are unable to cater to that.
See, I believe the demand is there because at BankBazaar, we have 70 million
Yes.
registered users. I can see people coming forward and applying for a credit card.
Right.
So if you're saying that compared in the last 12 months to the last 5 years, has the demand of people who want a credit card gone down? No, absolutely
Okay.
not.
Okay.
More people want a credit card, right? Today, even in tier 2, tier 3 areas,
Understood.
people have UPI, but they want that no-cost EMI.
Yes.
And that no-cost EMI is only available on that credit card. So our co-brand credit cards offer a lot of no-cost EMI when you're buying a cell phone. So the price is the same as UPI, but you get 6 installments to pay off at the same price. So the demand is definitely there. Now, let me look at another data point, right? If you look at credit to GDP in India, private credit to GDP, I know different reports out there, but our credit to GDP is approximately 60%. So 60% is the outstanding AUM of credit in India.
Right.
If you were to guess what the same ratio in all OECD, and I'm using OECD as a proxy for high per capita GDP countries,
Yes.
the average in all OECD countries is 150%.
Absolutely.
So I think that if you look at India, right, if our MSMEs have to grow, if people have to get a good education, if more houses have to be built, we can't stay at a 50%, 60% private credit to GDP. This has to keep growing.
Absolutely.
It has to grow in a sustainable fashion. So what the RBI has been saying is, it's not as if we grow fast for 2 years and then the bubble bursts.
Yes.
So I think they've been gradually looking at it, right? And I think they did a good thing with the risk weight average, because we saw in certain credit score segments, especially young people, low credit score,
Yes.
that they were taking multiple 10,000, 12,000 rupee loans. So the risk weight average came. Right. But now that industry slowed down tremendously, right? Now people are working hard, and we see this at BankBazaar. People are trying to keep their credit score above 750. People are even aspiring for 800. So I believe it's temporary because India is underpenetrated in terms of credit access. Aspiration is there. Demand is there. Yes, currently the approval rates have gone down.
Absolutely.
Yes, currently the standards to approve you are, previously I'll approve you if you're 720 credit score. Now, unless you're 775, I won't approve you. But I believe that this is temporary because India has to grow, right?
Yes.
And broad credit growth this year is going to be 10, 11%.
Yes.
That's not enough, right? We need to go back to 15%. We need to go back to 20%.
Certainly, I think that was a great dashboard that you explained, Adil. Now, let me come to the digital transformation of the DPI part, which we also discussed, earlier. I remember one quote. I had an opportunity to interview or moderate a session with Mr. Nilekani once, and he said that India is going through a prepared to a post-paid economy. I somehow really like that statement, and for which we need, for which we can see the great kind of digital revolution or transformation. So DPI is already happening, UPI has already happened, account aggregator, and so many things are already happening. What next do you think should happen so that the whole BFSI space can accelerate with the growth that you just estimated?
Thank you for that question. I spend half my waking time thinking about this. See, Nandan Nilekani is a visionary, right?
Yes.
And India has done great stuff in terms of DPI. But I'll tell you what, we have two choices. Either we can say we are the best, or we can say, how can we improve? And I'll tell you how we can improve. So you're right, UPI is great, Aadhaar is great. But today, right, if you want a loan, I need your Form 26AS, which has your TDS document.
Yes.
That document is not available in DigiLocker. So income tax and DigiLocker integration has not gone live. If I need your salary, I can verify it from your Employee Provident Fund passbook.
Yes.
That's not available in DigiLocker, right?
Yes.
DigiLocker, right, is not via OTP. There's a 6-digit code. I don't, and you don't remember the 6-digit secret code for DigiLocker. We need to make it OTP. In every system, right, account aggregator, your and my data is there, but no MSME current account is live today. GST account is being integrated. All these are work in progress, but how do we accelerate it, right? When it comes to, let's say, artificial intelligence, right? How do we create anonymized training data where multiple young companies on that anonymized India public data can do federated training?
Right.
There's an opportunity there. Let's come to video KYC. So today, right, human bank officer has to watch your video KYC to verify you're a mole.
Yes.
But today with face match, today with Aadhaar PAN mapping,
yes.
Do I really need to talk to you to see if you're alive?
Yeah.
Do I really need to talk to you to verify that you are really the person whose Aadhaar photo I have? Today, technology can take care of it.
Yes.
Why do we have bank officers sitting for 10 minutes watching, tens of thousands of calls? Can we not use tech to reduce the operating cost by another 80%, right? So I think the opportunity, Amol, is digital economy reform 2.0. So like we did GST 2.0, I think there are 5 areas in digital economy, and I think it's a brilliant opportunity because of the tariff, because of what's happening with H1B.
Yes.
If we can do that in the same way that GST 2.0 can increase sales and consumption, I think digital reform 2.0 in AI, in video KYC, in DPI 2.0, it can turbocharge the digital economy to go from 20% of GDP to 30% of GDP in the next 5 years.
Fantastic. And what role do you think AI will play here?
So AI is changing everything, Amol. I think all of us are putting our learning hat on. So Gen 1 AI, right, is you and I were chatting with an AI which will give us an answer. The answer was very good. But you and I were still chatting, and then we were taking that data, we were putting it into an email, we were putting it into a report, we were sending it to our friends, to our partners, we were sending it over WhatsApp. But now autonomous AI is coming in, wherein the autonomous AI, right, can not only receive triggers, but it's also able to take action. And these autonomous AIs are starting to talk to each other.
Yes.
I'm very happy that RBI has come out with a ethical governance standard for AI. I think all the fintechs, all the banks should read it, and we should all follow it. But I think AI, right, is going to create an opportunity where we couldn't take a service to rural India because it was too expensive. AI autonomous chatbots, right, are going to drop the cost by a further 90%.
Okay, I think that was too good, Adhil. Let me shift to a BankBazaar. I think it's one of the oldest, the portal, or we can say online marketplace which was created in India. Where is BankBazaar today? What kind of, how many people work with BankBazaar? What kind of growth have you seen in last couple of years?
Right.
And how has the whole market changed? What is your business model? Just tell me something, whatever you could about.
No, absolutely. See, we're putting out our FY25 audit data out, press release out next week.
Yes.
The business has been growing at a 35% growth rate over the last 5 years. So good growth rate. We've moved our business model into a recurring business model with co-branded credit cards and loans. So what I mean by that is we have co-branded credit cards with BankBazaar logo along with the bank logo in consumers' pocket. And they're offering special discounts on no-cost EMI, on especially digital spend categories, online dining, online groceries, online entertainment. What are BankBazaar consumers looking for? These co-branded cards are also helping consumers improve their credit score.
Right.
So we're offering a special service which is called Credit Strong, where every month for all our consumers, right, lakhs and lakhs of consumers, you get a customized video which tells you what the problem in your credit report is and how you can improve your credit score. Imagine building lakhs and lakhs of videos with a production team. To build this one video, we are spending probably 1 lakh, right? But with AI, we're able to generate a video for each user, a different video, and get it to them on a specialized fashion. So those co-brand cards are doing very well. 80% plus of our revenue is recurring revenue, which is coming from our existing base. We're going to share that we've breached 250 crores in revenue. First time we've done it.
Wow.
The company is EBITDA profitable. So very exciting. We'll put out the numbers next week. And hopefully we're looking to, make use of this positive news, get more traction and work towards the next stage of the business.
No, certainly. And how do you see yourself? Because the whole fintech ecosystem is growing aggressively. And one beautiful part about the whole fintech ecosystem is they are absolutely about partnerships and the collaboration, which is also with you.
Yeah.
You're not a typical regulated entity, but still you are fueling the growth of the banks by co-branded cards or generating leads or something like that. So how do you see yourself maybe in 3 to 5 years, and how do you see the whole partnership model will shape up?
Yeah, absolutely. So like you said, we partner with regulated entities.
Yes.
I think that's in our DNA. And, we work with over 10 banks and lenders. And what we've seen is there's a specific DNA to enable that kind of deep integration. So today you can get approved on BankBazaar from any of our 10 partners, but on the BankBazaar app.
Right.
There's no paperwork, no meeting. And that's been a key differentiator because, when I look around, very, very few people, I've seen people with 1 integration, 2 integration, but to have 10 integration, that to deep integration where all the backend, all the approvals, all the video KYC, everything happens on the BankBazaar side, right? That truly speaks of our partnership DNA. And we're very focused on governance. So I think what the RBI says is very clear. They're saying operate according to the black and white. Don't operate in the gray zones, right? So we've been very clear that we'll handle consumer acquisition, new customers, 70 million database, consumer experience, onboarding, showcasing special offers. But the bank will manage compliance, collections, balance sheet. And that model, I think, has worked out well for us. And it's a model I feel that will work out well for the fintech market in the next 5 years.
Anything specific on the fintech side? Because I have been following this space quite aggressively.
Right.
And what I see is what started with wallets, payments, shifted to digital lending, and now shifting to wealth. And now people are also talking about tokenization, stable coins. In your view, Adhil, because I'm sure you're following this space quite aggressively, what will work for fintechs going ahead?
So I think what will work is if you look at any industry you mentioned, whether it's credit, whether it's insurance, whether it's investment, India is still highly underpenetrated. So the metric I use is you compare us with any high per capita GDP country, we are at 1/3 of the level of penetration. I think the solution to the last mile, whether it's in Mumbai or in the smallest village, is to use the mobile phone and use India's digital public infra. I think the real opportunity is if fintechs come together, banks come together, regulator comes together at events like this, and we really see, right, not for your benefit, not for my benefit, but how do we build India's digital economy at the next level? We have a lot of conversation in terms of Make in India, but can Digital India reform be as important, right? Because Digital India is multiple pieces. There's privacy somewhere, there's consent somewhere, there's video KYC somewhere, there's DPI somewhere. Can we pull it all together into one digital economy, big bang reform, right? Like we're doing Make in India, big bang reform. I feel digital economy needs that 2.0 push. And I think the rest, the fintechs, the banks can do the rest.
I think that was meaningful, Adhil. Thank you so much for sharing all those insights and relevant points with us. Thank you so much.
Great conversation, Amol. I love your questions.
Thank you. And thank you so much for watching FinTech Diary on etbfsi.com. Stay tuned, stay connected. Thank you.